What's going on, guys? Tony Ivanov here, and today I'm going to bring on a guest speaker. His name is Nick. You've seen him before. He is an options trader. He leads the options wing of the Trade Buddy chat room. So if you want to check out the chat room, he's in that chat room every single day giving out his picks, his watch list, and his trades, and breaking down why he's in a trade. He's a very smart guy. He's made some killer trades on options. Last week he made 900 bucks trading, half hour per day, just swing trading these options trades. So it's really awesome seeing him do that, and it's really useful to understand a bunch of different strategies as far as trading goes, because if, let's say, one strategy isn't working in one specific time frame, like the past 3 weeks, day trading hasn't been so well. Well, he's been killing it in options. So if you're able to go from one niche to another niche as far as trading goes, then you can really be a better trader. So I'm working on learning options, and I suggest that you try learning as well. So he made a video on the basics of calls and puts, and those are like the two basic trading styles of trading options. So it's a very nice video. If you enjoyed it, please leave a like, comment, and subscribe. If you want to try out the Trade Buddy chat room community, you get access to 5 different chat rooms, and there's a free 7-day trial down below. So you can check that out. If you like it, cool. If you don't, you can cancel it. No harm done. And then also, if you don't know, every single day I give away $25, and it goes to a random commenter from the previous video lesson. So that's why you should comment on every single video. So we're going to check out who won right now. Let me just zoom down my face. Running the random picker right now. So here it is, and here is the winner. His name is Alexandre Silva. He says he's learning a lot so far. That's awesome. If you just found this video and this is the first one you've seen of me, I am a day trader. So the main thing that I trade and teach is day trading penny stocks. So I have a library of, I think, over 100 videos now of day trading. So there's a whole bunch of free content that you can use to learn. There's no excuses that you can make to not learn. The only thing that you need to put in is that time and dedication to study, because there's so much content on this YouTube channel that it's really it's worthwhile to sit down, find the time. Don't watch Netflix, watch the YouTube videos to learn how to trade and better your future. So make sure you send me a YouTube message with your PayPal email address, and I'll send over the 25 bucks to you. And so yeah, if you want to enter the raffle, like I said, leave a like, leave a comment, leave a subscription down below, and let's get to the video. So if you have any questions for Nick, he's going to be reading the comments as well. So if you need him to clarify anything at all, drop him some comments and just give him some tips and tricks on how he can be a better teacher, because he's new at this. So give him some slack. But if you have anything that you can recommend for him, drop it down in the comments, and he'll be happy to help you guys out. So here's Nick. Take it away.
What's up, guys? Nick Herntier here. Move my monitor over. I am going to be going over the basics of options, stock options. Now, stock options can be super just intimidating, and a lot of people don't know how to trade them. A lot of people don't know what they are, and it can be, like I said, just really intimidating. And there's a lot of different strategies to do. I'm just going to stick with the straight up basics, the easiest stuff I can manage, and try to explain it to you, in the most simplest way I can. There's tons and tons and tons of videos on stock option basics, so hopefully mine will add something to, all the other ones, maybe something that isn't out there. Otherwise, the best thing to do if you want to know options is watch my videos and watch everyone else's videos. There's a lot of good teachers out there, and you can watch one video that explains it really good, watch another one that kind of sucks, and you might have to rewatch videos just until the concept clicks. But I'll try to do my best to make kind of a little option series on how I trade and the different options there are and what you can do and all the different strategies. But for today, We'll just go super basic. So with options, there's two different options you can do. You can do calls and you can do puts. Okay, we'll stick with calls, we'll stick with puts. You can either buy a call if you think the stock is going to go up, or you can buy a put if you think the stock's going to go down. That's basic. You can also sell a call and sell a put, but that's more advanced. We're not going to be getting into that. I also have to say, the first thing you want to do if you want to start trading options is you need to fill out a form with your brokerage account, and you have to apply for options. Options are viewed as high risk, so they don't want to just give everyone just free reign of options. They like, you know, you have to put in your risk tolerance, answer some questions, and then they evaluate you, because there's different levels of options you can get qualified for. Yeah, because they want to try to protect you so you don't just lose all your money and blow up your account right away. So you have to apply for options with your brokerage account. You can't just go in and just be like, I'm going to trade options. I'll listen to what Nick said. And then it's going to come up and go, oh, you trade failed. You're going to what? You have to apply. It usually takes a few days to get approved. Also, I'm about 99% sure it always requires you to have the margin account. So if you're working on a cash basis because you're getting around the PDT rule, then you're gonna run into problems there. They're gonna move you to a margin account, and then there's that whole thing going on. So yeah, that's something to keep in mind. Because I know there's a lot of just day traders out there that like the cash account, like to do the penny stocks and day trades, but that's the way it goes. Just telling you straight up. So we're gonna look at calls, puts, buying calls and puts today. So there's gonna be, if you look up the definition of what a stock option is, you're gonna hear a lot of stuff about it's the right but not the obligation to purchase shares at a set price, something like that. Don't worry about that, and everyone's gonna say, oh, there's 100 shares per contract, and that gets kind of confusing. If you're thinking about it, you're thinking, oh, I control 100 shares of the company, and what's that mean? Just think of it this way: you're buying the option at a certain price, and then if the stock goes up, the price of the option goes up, and then you sell it. There's expiration dates where this option essentially becomes worthless, or you actually have to buy the calls or the puts if they're in the money. But as long as you get out before expiration, you got no problem. There's nothing to worry about with the expirations. Okay, so you'll see stuff like strike price. Strike price is essentially the price you think the stock's going to be at expiration. So we're not taking it to expiration anyway, and this is super basic. So yeah, don't worry too much about the strike price right now. So I'm going to show you how to buy a call or buy a put. So we'll look at SPY here. That's up on the chart. On Thinkorswim on demand. This is just November 13th, 2007. I picked a random date and 2:30, so it's still got an hour for market close because I'm Central Time. So let's say we were thinking SPY was going to go up. We go to trade. So here's the option chain here. That's what it's called. Here's all the different options with the expiration dates. Okay. So usually, and now you'll see it says weekly, 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 and then not. Weekly, weekly, not. So you can just ignore the fact that there's weeklies. There's weeklies and monthlies, but since this is super basic, ignore it. So this is going to be 11 days to expiration. This is going to be 18 days, 25, and there's the expiration date. So we'll go out, say, these ones. And if we're looking, you can change the amount of strikes that are listed. So we're going to have the calls on the left side and the puts on the right. Sometimes Thinkorswim does this weird thing on demand where it lists them. But anyways, and that's Roku, so we'll put in SPY like SPY. We were looking at the chart. So SPY has even more than Roku. So we'll look at these for November 22nd, say. Alright, so if we go back to our chart, we will see it SPY's at 258.48 right there. And we think it's going to go up, so we want to buy a call. So the easiest thing to do is we have the bid and the ask. The delta and the theta actually don't show up. There's Greeks involved with options. Just ignore them completely for now because we're doing super basics. That's kind of advanced strategy, but don't look at them for now. Don't even think about it. They're important, but it's not one of those things where it's like, oh yeah, you have to have the delta at in between this number and you don't want theta to be. Just ignore that right now. The main key is the volume. This is how many are being traded, and the open interest, this is how many people want to get in. So, and then we have the bid and the ask, just like the stock. So if we were to get in at the 257, say 257 strike, so that's kind of where we think it will be. I think it'll probably be higher, and I probably know it'll be higher because SPY went up, but we're on demand, so we get to look back. So if we wanted to buy this at 233, 236 is the bid ask, I would right click and then go to buy and then go to a single. Now it's up on my other screen, or you can just hit buy, left click, and it'll pull up at the 236. You can always move it to the midpoint. The midpoint will be the bid plus the ask divided by 2. So that's the midpoint. That's how Thinkorswim figures out the mid. Now here's how many contracts you're going to get. You can set the default differently in Thinkorswim. We'll just go down to 1 right now. And so there's the expiration, the symbol, the strike price. We're doing a call because we think it's going to be going up. And the price says $2.35. So now you're thinking, all right, it's $2.35. Well, it's $2.35 per a contract. But a contract is 100 shares, so you have to multiply it by 100. So that's the only thing that I wish it would just say $235, because everyone knows that. It just makes it look like it's less. So one contract will cost us $235. Okay. So you hit confirm and send. Our max loss would be $235. That's how much we're putting in, obviously. And our max profit is infinite, because if the stock goes to $1 million, we would make gobs of money. We would make millions of dollars. That would be awesome. But yeah, clearly not going to happen. So we would send the order, and we got filled at $235. So that's how you buy a call. Now, if you wanted to buy a put, if you thought that stock was going to go down, it's the same thing. You just buy a put, buy a single. You would buy a put, 165. We'll just do the natural point. It doesn't matter. It's on demand. It's a virtual order anyway. Now, there is max profit on puts, because if the stock goes to 0, then it can't go any lower, because we're assuming it's going to go down when we buy a put. Okay, so now we also have a put. I wouldn't do that in real life where we buy a put and a call, but whatever. So you see these are highlighted. It means they're in the money. That means if it were to get executed right now, so if the trade were to get executed, you would actually make money on it, or it would have intrinsic value. You're going to hear stuff like intrinsic value, extrinsic value, in the money, out of the money, at the money. Like I said, just don't even pay attention to that right now. You're going to look at some of these stuff and go, well, why don't I just buy, instead of at the 230 we put or whatever, why don't I just buy a bunch at 19 cents or 20 cents? It will only be $20 a contract. Well, because it's so far out of the money, If the stock goes up, it's not going to change that much. And if it doesn't, if the stock doesn't hit, like say the 261, you're going to lose a lot more money than if it were, you know, actually in the money. So it's a risk and reward type thing. So like the farther out of the money you go, it's higher risk, greater reward. The farther in, it's, you know, less risk, less reward. And that's kind of a good thing about options, is there's so many different options you can do, and you can just kind of, you know, it fits all types of trading styles. But I'll do another video sometime on how I like, you know, why I like options. But here's all the different options you could essentially do. You can do a single, that's what we're doing, just single call, single put, a vertical spread, back ratio, calendar spreads, diagonals, straddles, strangles, butterflies, iron condors. Iron condors are super popular. You can roll stocks, but all that stuff is just all advanced strategies that you don't really need to know in order to trade. If you just want to trade and have fun and go small sizes, obviously paper trade first. Use on demand and just see what happens. Look at charts. Just paper trade, paper trade, paper trade. I mean, everyone knows that. Don't just get in with real money and just start going crazy. You're gonna blow up your account and lose all your money. Everyone knows paper trade first, guys. So, like with on demand, we have our two SPYs, the different ones. Let's jump ahead 2 days, see what happened with on demand. You gotta let it load. But yeah, so that's really the basics of options. The biggest indicators you want to look for when you're picking is volume and open interest. You don't want to get into a stock that has super low volume, super low open interest. I mean, the volume might be, you know, 0 sometimes. The volume might be 5, open interest 3. It's just like, you do not want to get in on those. Those are not good to get in on. Let's see what would have happened. We're actually with SPY. Our one would have been, our put would have made us money, $128, and our call would have lost us $118. So obviously SPY went down in the last couple days. Yep, we bought it right around here and it dropped. So that can show you too. It was 2 days ago and it dropped. Where was it 2 days ago? What am I on? The daily chart. So it was here. It dropped from like 257, we'll say, to 256. So it dropped 2 points, a point and a half in a day. So in a normal option or a normal stock, you would have either, you know, gained $1 or lost $1. And in the options, we would have, you know, lost 115 or gained 122. And coincidentally, it was at 250. And in each of them, we put in, one we put in $235, the other one we put in $164. So actually, the one that we put in $164 would have made us more money than what we lost at the 235. But that's the way it works. And that's really the basics of options. The single, you buy a call, buy a put. Think it's going to go up, buy a call. Think it's going to go down, buy a put. I'm going to leave it at that. Thanks, guys. Like, comment, subscribe. We're always going through options in our chat room. Check out Tony Ivanov's stuff if you want like penny stocks. His program is sick. He's super good. Subscribe to his channel. He's got super good information, super technical. And our chat room, like I said, I'll post a link below. You get a free week trial membership. Join up. I'm always in options chat answering questions, throwing out trade ideas. Everyone's always in the trade alerts channel, throwing out penny trade ideas. It's just a really good community to be in, and you know, it's all live obviously, and it's just great. So thanks a lot for watching, guys.